Hello and welcome to a new video from Dividends Daily. Today we're going to talk about the real estate investment trust W.P.Carey, short WPC. So let's get started. WPC is a triple net lease REIT, which means that their tenants pay the taxes, the insurance, and also cover the maintenance cost for the buildings that they lease, thus triple net lease. And WPC has been operating in this space for around 45 years, but they only became a REIT in 2012. So let's take a bit closer look into their portfolio and what it looks like. Overall, WPC owns a portfolio of 1,215 properties that they rent out to 352 tenants. They have a well-diversified portfolio, not just in terms of the buildings and the type of segments that their tenants are operating in, but also geographically. They have around 35% of the annualized base rent is coming from Europe. The rest is coming mostly from the US. So when we talk about the buildings, the properties that they lease, we can show you here the breakup of the facilities that they lease out. So we can see that 47%, almost 50% of the properties are industrial and warehouse related facilities. Another interesting fact to point out is that we can see here retail, which has certainly suffered during the pandemic, is only accounting for 17%, so they do have limited exposure to retail. Now, the diversity of WPC's portfolio is really something I love about this REIT, and it shows in the rent collection as well. The rent collection was at 98% in Q3 and even went up to 99% in October of 2020. So, let's take a look at how the REIT has performed over the last few years. Starting from 2012, when the company became a REIT, they have been able to increase the rental revenue year after year. They've only been a bit stagnant in 16-17. Looks quite impressive. I'm specifically focusing on rental revenue instead of total revenue to exclude any sold properties. From actually generating only $120 million in 2012 to almost 10 times this amount 8 years later in 2020, all with a debt to equity ratio of under 1, shows that management has been doing a good job. While net income has been growing nicely as well, it was not consistent due to paying down higher amounts of interest in certain years. Now, how did the pandemic impact WPC? While many other REITs, especially the ones specialized in retail, have been struggling with rent collection, WPC was able to collect almost all of its due rent. The collection rate for the third quarter of 2020 was 98% and even 99% in October 20, which is indicating strong quality of their portfolio and their tenants. Now, very briefly on their profitability and debt. So the company is very profitable with a net income margin of 38%, benchmarking to sector median at 12% or peers such as Store Capital at 32%, Stag Industrial at 27%, and Realty Income at 25%. In terms of debt, WPC has $6.3 billion in debt, which brings the debt equity ratio to 0.91. So below 1, I don't see an issue here, especially with their profitability and the low interest rates. Now, taking a look at the dividend. WPC's dividend yield currently stands at around 6%. Dividend growth is expected to be rather low, around 1 or maybe 2%. The dividend has been increased for 23 years in a row, but since the company, as I mentioned, just became a REIT in 2012, most financial websites show 9 years of growth. And finally, in terms of valuation, when we talk about valuation, What we actually want to know is if the price we are paying for a stock is justified. What are we getting for our money? In this case, with W.P.Carey, we're getting a REIT with a $12 billion market cap that is producing $450 million in net income in the trailing 12 months. That is more than Realty Income has generated, which is a $22 billion company, or more than twice as much than Store Capital, who is an $8.9 billion company. So from that point of view, it looks like the company is fairly decently priced. If you're interested in ratios, the price FFO ratio is below 15, and also reference point here, we have Realty Income at 18.7, Stag Industrial at 16.7, and Store Capital at 18.6. When you pair that with the reliable yield of roughly 6%, WP, in my opinion, is a fairly priced stock. So I hope you've enjoyed this video, and thanks for watching.